More than $30 billion was wiped off the value of the local share market as investors dumped energy, gold and other mining stocks. I spoke earlier to Ken Howard at broking firm Morgans. Ken Howard, in a word, a horror session.
Yes, a pretty lousy market today, off 2%. And if you're in the energy space, your portfolio is probably off 6%, and the big miners are even off 4 to 4.5%. So you don't have to look too far to find the cause of the negative market today. All of those commodity areas have really been feeling some weakness. So we had copper over the last 3 months off 8%, lead's off 9%, nickel's off 13%, and we've got iron ore off 20% and oil off 30% over the last 3 months. So a pretty tough space. And you were sort of okay if you were there with the low cost mines and a fairly stable balance sheet, but any kind of hint of production and expansion activities or any kind of stretch there in your balance sheet, take for example Fortescue and Santos, both off 10%, and Panost off 20% today. So a pretty rough day. Now
the energy sector was particularly badly hit. Take us through the carnage there.
Yeah, look, as I said, the oil price is off 30% over the last 3 months. So there's been a lot of stocks there who have really been feeling it. If you've been in the junior oil and gas exploration place, chances are your share price has halved over the last 3 months. But look, the last week has been particularly savage. We've got the big players like Woodside and Origin off over 10%, Oil Search is off about 15%, and Santos is off a fairly eye-popping 25, 26%. Anyone would think Curtis Island had disappeared. But look, it's not all bad. Certainly it's tough for the producers, but the rest of us out there, we're consumers. We've got Qantas up 16% for the week.
I was going to say, what's it doing for airlines? It must be a field day for them.
Look, in the short term, it's obviously a positive, but the big game there for the airlines is capacity factors, and I'm sure it'll be a race to the bottom as far as the airlines are concerned to compete on price and to try and fill up their planes. But look, nonetheless, cheaper energy is good for the economy generally. It means every household will have an extra $10, $20, $30 a week. It might take 6 to 8 weeks for the supply chain to flush through with the lower cost oil, but it will come through, particularly if the oil price stays where it is.
Now, Ken, the gold sector has gone down like a lead balloon. Why do you think that is?
Well, look, I guess there's a couple of elements there. Gold as a commodity is only down 10% in the last 3 months, and I say only, but it's one of the better performing commodities. But this sector here in Australia is down 30% over that period, and really it's because we don't have a big low-cost miner with a really strong balance sheet in that space. So they're either they have a stretched balance sheet, or they're in the junior oil exploration and development side of things. So they're really feeling, the lower gold price and lack of investor confidence. And talk about lack of investor confidence. We had that vote on the weekend where the Swiss population voted 78% no for returning to the gold standard. And when it comes to gold, it is all about other investors seeing it as a store of wealth. If people don't see it as a store of wealth, there's not a lot of commercial uses for gold. And gold, unlike oil and gas, it stays in the system. Oil and gas is obviously consumed and needs to be replaced every time somebody turns on the engine. So it'll be a pretty tough time for gold, I think.
Ken Howard, thanks for kicking off the week and every week this year.
Thank you, Tikki. It's been a pleasure.